Happy Friday, everybody. Welcome back. Swan Signal Live. Another Friday. It's February 13th. My wife told me it's Halloween today. Friday the 13th mixed up with Valentine's Day tomorrow. She's a big Halloween fan. So apparently we have another Halloween day to celebrate. Anyway, happy Halloween, John.
I was unaware. I didn't get you anything for Halloween Day. I hope you're not upset.
Heck, you forget me. Well, it's been a week now since the big crash and recovery back up to 70K last week. The 9th worst crash in Bitcoin history. So here's Corey saying that you survived. Congratulations, you survived the 9th worst crash in Bitcoin history. And here we are. We're up about 6% today, back up to about 69-ish and holding. So yeah, who knows where the bottom is here. We seem to be in a price discovery mode, John. And I mean, it's just anybody's guess at this point. And it's like the scoreboard, like watching the scoreboard. Don't obsess about the price. You should have that long-term vision here. Like I like to say 10 years. A lot of times people say 4 or 5 years. I like to say 10 years as your time horizon and help kind of decrease the stress that all this volatility produces in many people. So John, I'm just curious though, like how are you feeling now? We're a week from this big crash. Things have stabilized a bit. What are clients coming and asking you now? I know that there was a lot of inbound last week, like, hey, I didn't expect this. And people were a little surprised and taken off guard. So what are you hearing now?
Yeah. Lot to cover. And first off, I'll just say the shirt was intentional. This is can't see the whole thing, but these are pucks over here. The little USA hockey shirt.
Yeah.
For the Olympics that are upon
we good?
us. I think it's Canada's the best team on paper. USA is close behind them. In any game, USA could beat Canada, but Canada has like so many superstars on that team. It's hard to not say that they're the best on paper.
I mean, you can be aware of the bread and circuses thing, right? In the twilight of an empire and still enjoy them. I think
totally. And hey, I have my view on bread and circuses is if we enter the utopic hyper Bitcoinized sound money world that we all envision in our minds, sometimes bread and circuses would be a big part of it. When you you actually would want to spend time at with bread and circuses. The reason it gets a bad connotation is when the bread and circuses are used by politicians or powerful people as a distraction.
Yep.
But bread and circuses, nothing wrong with them inherently.
Yeah. Well, enjoy the Olympics.
Yeah.
I'll have to watch a hockey game.
Yeah. No, it's good. It's good. It should be fun. Just the men's games just started this week, and there'll be a lot more. So yeah, what to say about since the last week? So Corey's chart showed peak to trough drawdown. So I think it's something like a 52% drawdown from the high in October, which is just over 4 months ago now. 126 to 60K roughly. There's probably something to be said for just like a daily drawdown. We basically went from 70 to 60K last Thursday. So that's like a 15% one-day drawdown, which is really ridiculous. Obviously, the next day it did rally back up to 70, and we've kind of been chopping around between 65 and 70 since then. I will say, it is always interesting to get into what are clients saying, because we have the unique position where, and this was the case at when I was at Goldman as a portfolio manager. One thing that clients like to hear was like, hey, what's the vibe that your other clients are thinking right now? And obviously you would never name names or get too specific, but you can kind of just say, hey, generally speaking, all the clients I'm talking to, here's what they're worried about. Here's what they're focused on, like that kind of stuff. I would say a couple of things. One is that people definitely are scratching their heads and saying WTF. I don't think anybody thought we were going to get back into the 70s or the 60s, but we did. And then another thing I would say is, and you do see this at bottoms, I'm not necessarily calling a bottom, but you do see this type of thing at bottoms. Towards the end of last week and the beginning of this week, there was a growing chorus of people telling me they're getting more confident that we're going lower, meaning lower than the 60K wick that we hit.
Well, fear and greed this week hit 5, which is the lowest ever in Bitcoin history.
Yeah.
That's
Yeah.
all. That's the quantification of what you're hearing, I think.
Exactly. But the flip side of that is it is starting to make me think of November 2022 when we were at 15, 16K and tons of people were telling me, hey, I think we're going to 12K. That was a big number, or 10K, just, a round number. People said we were going to. And some people were waiting on the sidelines for that dip, and it just never happened. And then by April of 2023, we basically hit 30K again. So that's like almost 100% gain a few months after the FTX collapse.
Yep.
And there wasn't necessarily some like big liquidity event. There was the US regional banking crisis, but to be honest, most people didn't even like know what that was. It got papered over so quickly. So I just point to that for two reasons. One, these are things you see at the bottom where people say, oh, I know we just had a 15% crash in one day and 52% peak to trough, but it's going lower. That's like, and these are hardcore Bitcoiners who totally believe in the asset. So there's more people saying that. And then number two, let's just think back to what happened the last time we had this big of a fall. And there were a lot of people calling for it to fall lower. It didn't happen. And then 5 or 6 months later, there was a big rally. So just because it happened in 2022, 23 doesn't mean it has to repeat that way. But that's what you'll see a lot of people doing now, right? Is looking back at prior periods of Bitcoin and saying, hey, when we had a drop, this is how it behaved.
Yep.
It's somewhat helpful, but it should not be taken as gospel.
Yeah. I mean, also, if the 4-year cycle theory is still alive, and there's definitely been some life breathed back into that, lots of debate about whether or not it was still applicable. And, we've talked about it here on the show. And if that's the case, and we hit the all-time high, then we'd be, looking at a long grindy bear market. And, in the past, we've been down 80% in those typically. So we'll see what happens. It's going to be very fascinating. Things are a lot different. And we'll talk about some of this stuff in the show about, these derivatives on top of Bitcoin and how they might be affecting price. And it is a new era. So lots to talk about. You're talking about how Bitcoin, you're hearing people kind of call, Bitcoin's death. And this is another thing that happens around the bottom, or at least, during well into a bear market, is like Bitcoin's completely dead now. And here's some receipts that Neil Jacobs on Twitter gathered together. And it's just, it's got the Bitcoin price and when those calls were made, and it just has happened throughout Bitcoin's history. We actually had last year, I think Jameson Lopp, who's at Casa and a Bitcoin developer, and tracks these Bitcoin obituaries. And he said last year was the first year that there was really no Bitcoin is dead calls, like prominent Bitcoin is dead calls. And they're coming out of the woodwork now. So we'll have another spike in 2026.
I think so. I have one that I think rises to be a Bitcoin obituary. It was in the same segment that Krugman was on with Bloomberg. I don't think we played this clip. We played a different one, but he called it a bust. And he said it's a 17-year-old bust. That to me rises to the threshold of being a Bitcoin obituary. Yep. I'm not sure who manages that site, but I think at least that one should be on there.
Yep. There you go. Okay. So it's a good time to go out and listen to kind of your favorite analysts, and because things are changing and volatile right now. So hearing their takes is useful. I've got one lined up from Kathy Wood and from Lynn Alden. Saylor was on CNBC. We could take a look at that if you want to as well. And we'll just react to these. This is Kathy Wood.
So trueflation is down to 0.8%. And so it too was stuck in that 2 to 3% range. It is resolving to the downside. And I think it's going to go negative. When I see Pepsi cutting the price of potato chips and Doritos by 15%, I take note. And when I hear Coke saying, yeah, it seems like there's a bit of a backlash against price increases, I take note. Today, the existing home price inflation rate dropped to 0.9% on a year-over-year basis. And we think that's going to go negative. New home prices are already falling on a year-over-year basis. Gasoline prices falling. And then the good deflation is associated with technologically enabled innovation. And, the AI boom is massively deflationary. The AI training costs are dropping 75% per year. AI inference costs, so what it costs when you query ChatGPT or Grok, what it costs to answer that, that's dropping 85 to, if you believe DeepSeek,
98%. I'm not sure who that guy was chomping on gum next to Kathy, but we'll ignore him. Okay, so what's your take on here? Obviously, inflation's going down. What do you think about trueflation as a source? Just as a side note, sidebar, I'd love to hear what you have to say about that. And it's at 0.8%, and this is like an ongoing, like non-government, metric for measuring inflation in more real time than these quarterly reports that come out from the government. And prices starting to decline. We're about to do some home construction, and those costs are starting to decline from the highs where they were. Lumber went nuts last year, which is good timing for us. But I've been watching that, so I've noticed that those prices are coming down. So yeah, what are your thoughts here?
Yeah, so we also got CPI today, which is out of all the many inflation metrics that there are, CPI is probably the most popular one. But there is PCE, that's the Fed's preferred measure of inflation. Then there's like core, where they strip out certain things that they claim are more volatile and should be stripped out. I think that's debatable. But then there's like trueflation. I think there was another one called the Chapwood Index or something like that. There was another one called Shadow Stats at one point that I used to look at. And I think it's good that they exist because there is no such thing as the rate of inflation. We're not all consuming the same basket of goods. Even you as an individual, what you consume and pay for or are interested in from one month to another is different, and especially different stages of life. Imagine the things you cared about, their cost when you were 19 versus how old you are now. It's just completely different. So to say that there's like the basket of goods and the inflation rate is just it's we shouldn't take it as so precise. And even if there was, even if we could agree on the basket of goods, determining exactly what all of those things changed in price over a month time period is very, very imprecise. So that's the disclaimer on all this stuff to begin with. I don't think it's completely useless. I think it helps directionally to say, okay, roughly where are prices going. If you really want to compare, which one is better, I think you have to dig into categories like line by line, and you have to look at what it says. Charlie Bolello, God bless him for doing this. Every time CPI comes out, he has like the same tweet about this. You may have seen it before, but the cost of health insurance within the CPI, I'm sure the government has an explanation for it. It's probably not a good one, but they have some explanation. According to this, the cost of health insurance has declined by 20% over the past 5 years.
Yep.
So there's clearly some shenanigans going on in there with like methodology changes. When I saw that, I looked at my own, like, what do I pay for the monthly health insurance? And I have at least 4 good years of data with the same provider. And I looked at it. It's like up 20% per year or like 15% per year. And the government's telling you it's nominally down over a 5-year. It's just completely absurd. So there's going to be these obvious inconsistencies in inflation data. Putting all that aside, I think the bigger macro picture is that inflation, however you're going to define it and calculate it, it's not looking like there's this big uptick. And that probably gives the Fed room to cut at least a couple times this calendar year. That doesn't, magically make all assets pump ridiculously, but we're probably going to get at least 2 cuts this year, maybe more.
Let's watch Lynn now, and she's got a take that we should discuss about the gradual print, which is sort of a answer to Larry Lepard's big print idea, and many other people, but he wrote the book on the matter here, the big print, which is the government will be forced into a gradually then suddenly sort of event where tons of dollars will be printed, and their hand will be forced. Lynn is now talking about this gradual print, and this is going to be sort of slowly happening over time, and she talks about that here.
Obviously, the price action lately has been downward. And I think people are sort of trying to grapple with what happens now, whether Bitcoin's found a bottom and what could potentially turn things around. How are you thinking about that issue?
Well, so historically, when we look at Bitcoin price action, outside of very narrow examples like the COVID stimulus, usually Bitcoin doesn't have V-shaped bottoms. Usually it hits a floor, goes sideways for quite a while. I think we're in more of that range now. In November, it tried to find a bottom and did so for maybe 2 months before falling over again. So we can't guarantee there won't be another cascade lower. But I wouldn't expect like a very rapid recovery because I don't really see any sort of like massive stimulus on the horizon. So I think it takes time. And really the mechanism that it finds the floor is you get kind of the more like, the term is like diamond hand holders. Like they kind of come in very value oriented. They really know what they own. And they don't want to sell, and they start scooping up cheap coins. And because the new supply is so low, and because the market cap's not that big, it only takes a fairly small number of them to start really kind of putting a floor in.
Is there any potential catalyst you would see coming from a news perspective, that would get people back into the market? Or do you think it's more a question of like the price is low enough for long enough to draw buyers back in?
I think it's more of the second one. I think low enough, long enough, and eventually just the coins rotate from fast money to just more strongly held, and then it only takes a small influx of new demand, whether it's a different cycle, and at that point the coins don't want to leave where they are until they have a much higher price. From a news standpoint, I mean, there's always the possibility of a large buyer comes in that we're not expecting, some sovereign entity, for example. But I try not to base around those. I'd rather be surprised at the upside than surprised at the downside. I said the same thing about the sovereign Bitcoin reserve concept early last year. I was saying I'm not going to, base any price predictions on that happening. Fortunately, I didn't. I assumed that's not going to happen, or other than ring fencing their existing coins. Or to the extent that they do, I'd rather be surprised to the upside than expect that in my model.
And I'm really curious how investors should think about Bitcoin and crypto more broadly right now, like what purpose it serves. Because I know digital gold has sort of been the moniker for it for a while now, but it hasn't traded like gold, right? It hasn't traded like that traditional store of value. And indeed, while gold was going up, Bitcoin was coming down. It's traded more like a risk asset. So which do you think it is? Or do you think it's something different, and how should people think about it?
I think price-wise, it's still a risk asset, and the reason for that is because it's still small, and if it's going to get large, it needs upward volatility. And if it has anything with upward volatility, it's going to get euphoria and leverage, and therefore downside volatility. So as long as it's still a growth asset, I think it's going to be treated as a risk-on asset. Now, from a functional standpoint, because you can self-custody it and because you can move it around, it can give its direct holders some risk-off properties in a similar way that gold can if they put it in their basement or bury it in their backyard.
All right, we'll stop there. This is a longer clip, but she didn't actually talk about the gradual print as much. She alluded to it because she said she's not expecting any big stimulus anytime soon. So yeah, John, what do you think about this idea, the idea of the big print versus the gradual print, where the Fed sort of shifts from this, purpose to keep inflation down. They start using it. They're like, the main way we're going to do this is just to consistently inflate the balance sheet.
I think gradual print is the right framework. Big prints that have happened in our lifetime would be COVID and would be the GFC. So it is just by definition, it's kind of tough to be the one saying an event like that is about to happen, next month or even next year. But by definition, they're just pretty rare. The counterpoint to that, I guess I would say, is, just the fact that 2 of them happened in my adult lifetime is more than rare. Okay, fine. But it's still not something that happens, every year or even every 5 years. So, and you could point to some other market stress events like the regional banking crisis in 2023. But the takeaway from that one for me is that they're getting really good at papering over financial crises with more like tactical behavior. They didn't take interest rates down across the board. Like maybe a while ago, they would have done that because they just weren't as tactical. They basically cut interest rates for the banks specifically. That was the BTFP program. They did it on a Sunday. There's no congressional hearings, like big piece of duct tape, slap it on there.
Yep.
And it's not a big print. I don't think that meets the definition of a big print. So that's for starters. I do agree with the gradual print thesis. It takes some sort of really big and mostly unexpected event to cause a big print. That doesn't mean it can't happen. It's just hard to be the one calling for it unless you have some unique and definitive thesis.
Yeah.
The other thing I would just say is that Bitcoin did a 150% return in the year 2023. And then it did, I think, 120% in the year 2024. Well, but let's just focus on 2023. It did 150% return. And I would say there was no big print in the year 2023. So it's even though I believe there's not going to be a big print in the foreseeable future, it's not like Bitcoin just stays at 70K because there's no big print. The price can move dramatically higher in the absence of that.
Yeah, I think the one catalyst that I can think of is AI. And obviously people are talking about this, and you mentioned that it would largely be an unexpected thing that usually causes something like this. It blindsides the Fed, blindsides businesses. And so there's a reaction to that. I think obviously AI is being talked about a lot, but we may not expect the degree and the speed to which it will affect the economy. We have jobs, consistently going down. We've had some reports this month that were somewhat surprising. This is a chart that goes through January 2026, and you can see the steady declines since about the beginning of 2025. So the past year, there's been significant declines in non-healthcare jobs. Healthcare jobs are skyrocketing. So if you're a coder who's about to be laid off, maybe look into joining the healthcare force. So this could, I've Claude Opus 4.6, which dropped about a week ago now, is absolutely amazing. It is a step up, a significant step up, and it's very obvious. I've been playing with it a lot over the past week. Built this game that I built a long time ago in my childhood with a friend of mine when we were just playing around with coding. I was like, all right, let's see what this thing can do. Sat down during the Super Bowl in 4 hours and just had this thing done, and not just done, but like way better than it was before, or like, back in my childhood. And it was really fun to build on it, but it just kept up with me. It was so intuitive. It was like sitting next to a friend. It had a browser tab open that it was able to look at the game, and watch it, play test it in real time with me, and talking the whole time inside the Claude app about what it was seeing and asking me questions about what I thought. And it was just like interacting with another human, hanging out, coding this game up. It was an experience that was far more human than I've had ever with an AI. And Opus 4.6 was largely coded up and developed by Opus 4.5, along with the Anthropic team. But they've said that, this time the AI was far more involved in building this, new model. And that is only going to increase. Elon Musk was talking this week about how we just won't write code anymore. Code is just a human abstraction layer on top of binary, which is just the zeros and ones that the machine reads. And all of the coding languages and the compilers, down here, and then the abstract, scripting languages that we use, like Python or something, are very inefficient. They're just made so that we can interact with the machine, and it all gets translated down the line into binary. So Elon was saying this week that he thinks this year that coding will be dead, and that the AIs will just be we'll be vibe coding, and I'm just going to take natural language input and build everything out in super efficient binaries that will be way faster and way more capable than it would be if we had to compile it from source, right? So it's amazing, and this is happening super fast. So the one thing I could see really precipitating a big print would be a surprise at how fast these things are growing in capability and speed. And if it's, the singularity is the idea where, named after the physics of that point in a black hole where you cross that event horizon and we just don't know what happens on the other side. It's like completely unknown to humanity and science what happens over there. And Ray Kurzweil in 2005 wrote this book called The Singularity is Near. And he developed some quantitative ways to predict when AI would reach artificial general intelligence, which is a point where it's beyond human capabilities. It can make its own decisions. It could push the frontier of science and technology on its own. It's actually making discoveries instead of being led by human scientists, etc. At 2029, based on the law of compounding returns or something like that he called it, which is basically like a Moore's law sort of thing. And he was, hit these milestones. He's at Google. He's been at DeepMind for a long time. And he hit these milestones that he wrote about very consistently over the past 20 years. And so here we are. He said 2029. Seems like it might happen a little bit sooner. Who knows? And that singularity event will absolutely be something like, maybe a larger version of what happened with the great financial crisis or COVID. And that could just throw things into an absolute, disarray or just at least confusion about what's going on, because we just don't know what it's going to be like to live on a planet with a being that is far more intelligent than we are. That's never happened before.
All good points, and I'm certainly not going to claim that to have any real certainty in how things play out from here. I think there's a lot of speculation, and I'm not even like a deep user of like the latest and greatest thing. Even just before this call, I use some sort of AI or LLM every single day, every hour of the day. Yep. But it's not like the latest and greatest one that's like taking over your machine. So I'm not going to claim to be the expert there. But what just a few thoughts I would add to that is, if it's going to cause a big print, what would it need to look like is the question I would ask. And just to like level set these numbers, during COVID, when we literally shut down most of the economy, unemployment went from just like the raw level of number of people unemployed in the US went roughly to like 25 million people.
Yeah.
During the GFC, it went roughly to like 15 million people. So I think you just have to look at that and say, and the reason I point to those is because those are things that caused the big print, right? And the first one, GFC, was more of a financial crisis. COVID was more of a, hey, we are making the decision to shut down the economy and people need to be sent checks, and we're going to kind of pseudo bail out the treasury market in the process. If AI would have to come that quickly to cause like a real spike, and so that tens of millions of people are unemployed.
Yep.
I don't feel confident enough either way, really, to say that it's going to happen that quickly. And then this is a real big picture comment, but I do think we have to remember that we went from a point where, I don't know the exact numbers offhand, but probably something between like 40 to 60% of the population once worked in agriculture.
Yep.
And then we went to a period where now I think it's probably like less than 2% works in agriculture. And there was a lot of worker displacement. I'm obviously referring to the Industrial Revolution in the US. I'm not saying it's all smooth. I'm not saying everyone is fine. I'm not saying there's not a lot of scary uncertainty. There is all of those things, but there is more work to be done. And people, just think about the change of being a farmer to be like working in a factory. That was probably seen as like a completely different lifestyle, and people were probably saying, oh my gosh, no one's going to be able to figure out how to do this. I tend to be on the side that humans are going to figure out how to work with AI, and we're going to be more productive. There's going to be more jobs to be done. But again, that doesn't mean there's not pain and big adjustments along the way.
Yeah. So I think the big difference here is just the speed at which things are happening. So during those examples, and you could also use like the end of global like reserve currencies over the throughout history of humanity, and the like hyperinflation of fiat monies, for instance. Even those like happened over at a pace, let's say like, the Song dynasty, like they invented paper money, in like, 1200 or something like that, 900 to 1200, I think it was. And, the hyperinflation there happened far slower because it was, couriers and horses, and, the pace of information was so much slower than it is now. Now our global economy is completely connected. Information moves at the speed of light, and AIs can, will, basically roll out. They already have instantly available to everyone on the planet. And as soon as they upgrade, then it's like, okay, all of a sudden accountants are just done. Like every company is going to start using the cloud accounting service, the cloud accounting skill, and it'll happen pretty fast because the pressure will be there for businesses to do that. So I just wonder if our institutions can keep up with, this level of change. So I do think there will be lots of unemployment. I don't think that we'll have time to, retrain or adjust. We won't have as much time as I think people think we might. And so there will have to be some kind of UBI happening to just kind of keep society on track until that can happen, maybe, and hopefully it will. I think, Elon Musk talks about the idea, and many others as well, that, there's going to be so much productivity without human work in labor that a lot of people just won't have to work. Like you'll everything will be cheap and accessible and abundant is the idea. And I'm not necessarily advocating it, but that's the idea, that eventually we'll get to the point where you just don't have to work. But there will be this interim period where we'll have to support millions and millions of unemployed people in some way to keep like society from collapsing. So that's the one thing. Like if the one scenario that I can see that would, force a big print, and I think things would have to be pretty stable in order for the gradual print thesis to play out.
And in that sense, just one final comment before we move on to other stuff, but in that scenario, I could see it playing out somewhat similar to COVID in that sense, because unemployment is obviously different in many ways, but similar in the sense that COVID, unemployment would spike up, and then there was unanimous consensus about, hey, we need a bill that's going to help people out. And yeah, it's going to be a big spending bill, but these are unprecedented times. But then, and this is what I was getting into before when I said there was like a pseudo bailout of the treasury market alongside it. Because if you start spending trillions more dollars, your treasury market is usually going to get a little chaotic. So what do you need to do at the same time that you do that? You need to have the Fed come in and say, oh, we're doing another treasury buying program, because if we left it up to the market, people wouldn't buy our treasuries at reasonable rates. There's always a rate they might buy, but it would be something way too high to service the debt and have the budget make sense, or even, look sensible. It's always going to be a deficit. So in that sense, I could see it playing out somewhat similar to COVID. It's like, hey guys, there's crazy things happening in the economy. We're going to spend trillions more than we otherwise were. And because of that, the Fed's going to buy more. That to me would classify as at least somewhat of a big print.
Yep. Makes sense. Let's take a look at here's another chart on the kind of the state of the economy. Michael Batnick on Twitter. This is a wild market. We haven't seen anything like this since the dot-com bubble. Over the last 8 sessions, 115 stocks in the S&P have declined 7% or more in a single day. Average drawdown when that happens is 34%. Right now we're at 1.5% below the all-time high.
I'll just make a quick comment on the back of this one. So I went to the New York Stock Exchange on Tuesday afternoon to do one of these like 5 or 7 minute media appearances. And I'm just kind of looking at my phone as I'm waiting to go on and seeing what's going on. And I see that Schwab and some of these other TradFi brokerage platforms, they're down like 10% or something. And the reason is because there was and I guess this has been building for a while, but there was more recognition of like some sort of software that would basically replace what advisors were doing, either from like investment planning or tax strategy, things like that. And the stocks like Schwab went down 10% in a day. And I think it just points to the fact that, like the chart you just showed, this is a crazy market. And all these AI announcements, people really don't know what to make of them. And it's
Yep.
just coming out and saying, oh, all you Schwab advisors are going to be replaced. And it's probably not that dramatic, but the market doesn't know how to react. So even a kind of very sturdy platform like Schwab is not sure what AI is going to do to them. And then just on that chart as well, I'll list off a few names here that are down like more than 40% in the past year. Fiserv, FactSet, Lululemon, PayPal, ServiceNow, United Health, Adobe, HP, Workday, Salesforce, Accenture. That's a lot of names that everybody probably knows. Those stocks are all down at least 40% in the past 12 months. So this is a volatile market. And I think there you can point to AI in a lot of those names, because people just don't know how it's going to play out for those companies on like a 1, 3, 5-year basis.
Yep. All right. Let's see. All right, let's jump over to this is okay. So this is one I think you threw in the chat.
Yeah.
Yeah. So this is the VJ Silvam. He's a Harvard Law graduate. He was a former Goldman Sachs, so he's a Goldman alum like John. So there's this is a chartered financial analyst, is the CFA. It's like a prestigious professional designation. So the CFA Institute reviewed his 2025 book, Principles of Bitcoin, and praised its rigorous, multifaceted, is what they wrote, analysis of Bitcoin through technology and economics. And so the review emphasizes that you've got to unlearn these traditional asset valuation methods to really grasp Bitcoin's value to society. And so I think this stood out to you because this is, an endorsement from a traditional finance body like CFA is, you just haven't really seen that before. And they're showing some curiosity and some understanding. And we talked last week about that sort of knowledge gap, right? The knowledge arbitrage. And I think this is a good example of, of catching up of traditional finance leaders, influential people in finance, sort of catching up on that knowledge gap.
Yep, exactly right. It caught my attention because the CFA Institute is prestigious. It takes people at least 3 years to get their full CFA because you have to pass 3 levels, and they're generally only once a year. I mean, if you do it all as fast as you can, it might be 2.5, but either way, it's a long time. And it stood out to me because I'm planning to post this to LinkedIn next week. Try to get the word out to my former colleagues. They're not on Bitcoin Twitter. Like they're not listening to Bitcoin podcasts. But what might catch their attention is something that the CFA Institute says.
Yep.
And so I think it's positive. I will also say that the wording of this, and this is part of the review, so I need to read the full thing, but I think they did carefully word the review. I would call it positive, but it's not really an endorsement of Bitcoin. It's more an endorsement of the author. Like they say something positive about the author and how he went about it, which is this guy, VJ Silvam. But they stopped short of saying, you really need to consider Bitcoin. It was more like you should be open-minded to Bitcoin. You have to unlearn some concepts. So they're not at outright endorsement, but it was still more positive than I expected them to be.
It's not saying that this is some kind of, scammy asset that you don't want to touch with a 10-foot pole. It's like readers would do well to approach Bitcoin with intellectual curiosity and patience. You don't know what you don't know. Through this work, VJ endeavors to close that gap that we were just talking about.
Exactly. They're not saying fix the money, fix the world.
Right.
But they are saying, hey, you should learn about Bitcoin and be open-minded, which is positive in and of itself.
Yep. Okay, jumping back to some AI stuff. This is interesting from Lightning Labs. Lightning Labs has been working on the Lightning protocol for quite some time now. been a leader there. They brought in a few of the devs that really invented the Lightning Network protocol, and then those who implemented it. So now AI agents can pay over Bitcoin Lightning Network. It's an open source toolkit from Lightning Labs that allows autonomous agents to operate natively on Lightning. It enables agents to perform instant programmatic micropayments without the traditional hurdles of identity verification API keys and manual sign-up flows. So this is effectively skills. If you know about agent stuff, these skills are just a plugin basically to give an agent a new capability. And I'm going to play with this weekend, John. Hopefully next week I can come back and say that I got one of my agents to engage in a Lightning transaction of some sort. And so this will be fun to play with. And this is really interesting to me because it's something that I don't think Bitcoiners have talked about enough. Is what is the impact of these AI agents that will proliferate from here? OpenClaw came out 10 days ago, 2 weeks ago, something like that, which is an open source platform, effectively a set of tools to build agents. And so I've got that installed on a Mac Mini, and I've been playing with it. And so this is just brand new, really, this agent thing where it's AI has escaped from the monoliths of OpenAI and Anthropic and Google, and are now in the hands. And this works by basically using those big frontier models that I just mentioned. You hook up an API into those, so the intelligence is coming from the big frontier models, but you have far more control over what the agent is doing. And so it's kind of unleashing those capabilities kind of under your control out into the world. And so it's very new, a couple of weeks old, and this is just going to proliferate. And then this is really the next stage of AI. And now that they can, this is perfect timing for Lightning Labs to drop this. I'm sure they've been working on it for a while in anticipation. But the thing is, like, what are these AI agents going to want to use, right? And the answers are already coming in. They are choosing to use Bitcoin on Lightning, and it's already happening. Bitcoin friend Pablo, used to work at Swan for a while, reported that he basically created an agent, gave it a Lightning wallet, and it's gone out and is making transactions. He wasn't using the Lightning Labs thing. I'm sure he rolled his own, but if you go and ask your AI about what will AI agents use, what money will AI agents use, and the obvious answer is they're going to use Bitcoin and Lightning. And here's an answer from Claude this morning. AI agents need money that matches their nature, permissionless, no identity requirements, no bank accounts, no legal personhood. Fiat rails are built for humans. They don't scale to millions of autonomous agents. Bitcoin is the only widely adopted monetary network where an agent can generate a key pair and start transacting immediately. Lightning enables the micropayments that agent-to-agent commerce will run on. And then it does provide the counter argument that stablecoins are really the other alternative for agents. So stablecoins are seeing more early traction because dollar denomination removes volatility, but stablecoins inherit the dollar's permission structure. They can be frozen, blacklisted, deplatformed. For truly autonomous agents, that's a fundamental vulnerability. So this is something that, like, I haven't seen really pushed as a catalyst for Bitcoin adoption, and maybe it's happening slower among humans than we would like. But these AI agents that will again be proliferating very quickly over the next few years to become more and more responsible for doing work that actually matters to human productivity, they will be using, I think, in large part, Bitcoin and Lightning. And so that demand, I think, is really underappreciated or under accounted for. And it will be interesting to see.
It will be. I have been, if anyone is a frequent listener of this show, they'll know that I am generally on the side of medium of exchange does not become widespread for Bitcoin for quite some time. The pace of it is always going to underwhelm you, what you want or expect to see. It would be interesting if if the medium exchange narrative, improves because of AI bots using the Lightning Network. I could certainly see that being the case. So I think you just laid out a good thesis of why it is going to continue. The pace and the magnitude is up for debate.
Yep. Yeah, it's totally fascinating. We've got some quick hits here. Yeah, here we go. Let me pull this over here. This is another piece of news on the Bitcoin front, Lightning front. Well, actually, not just Bitcoin front. So Bitcoin devs have taken steps to address the quantum threat, and this FUD has really been rising to the top. I think I saw Daniel Batten say, I think we've pretty much addressed the environmental FUD for the most part at this point, which is good. And now we're on to quantum, which has certainly been cited for a long time. Developers have said, these cryptographic algorithms that are being used are vulnerable to quantum computers. There are cryptographic algorithms that are not, or far less so. And so BIP 360, which is a Bitcoin improvement proposal, has been merged into the repository, the official Bitcoin repository. And so it introduces a new output type that removes Taproot's quantum vulnerable key path spend while maintaining compatibility with TapScript and script keys. So it'll remove Taproot's quantum exposed key path. It'll lay groundwork for post-quantum signature schemes, and it's implemented as a soft fork. So this is great. I know that the developers have been thinking about this for a long time, so I think the pressure is finally there to perhaps move through a consensus process to get a soft fork activated to prepare Bitcoin for quantum. Now, I think the general consensus is this is still, the realistic threat is still far away, 10, 20, 30 years even, amongst the people who I think have a good understanding and I trust to evaluate this, because I don't have that expertise. But, things change and tech advances faster. Maybe AI will help unlock some of the, hurdles to really developing quantum to the extent that it could threaten cryptography. And so maybe it'll come faster. So I think now's the time. And because that pressure is starting to mount, there, might be the pressure to build consensus around a soft fork, which is a messy process in Bitcoin.
The only thing I'll add is I saw 3 good conversations, or what I have not listened to all of them, but what I think are good conversations. Brandon Black reared in code on what Bitcoin did. This is all on the quantum topic. Matt Corallo on Stefan Livera's show, and then also Stefan Livera's show, James O'Byrne. All 3 of them can give you their thoughts on the quantum topic if you're interested.
Yep. And yeah, I definitely recommend it. It's a conversation that will be coming to the forefront more over the next year or so. And so it'll be good for Bitcoiners to get up on that conversation. So those are some good. I've listened to one of those. I listened to James on Stefan Livera, which was great. I always love listening to James. Okay, let's see. I think we're good. We haven't. Here's another quick hit. X Money. Elon announced X Money live within a closed beta in the company. In the next 1 to 2 months, we'll have a limited external beta and then go to all X users. It's intended to be the place where all money is, the central source of all monetary transactions. And there's a graphic here that says 1 billion users, and it's got the little satellites orbiting that are all of the services that Elon's company provides. So, I mean, this guy it's just an absolute marvel to me, the ecosystem of companies that he's put together and so quickly. And it's just becoming basically if you want to operate a new civilization, he's building out everything that you need to do that, right? And he just hasn't gotten into money yet, and which is a big part of a human civilization. So here's his play, and looks like it's going to drop. I haven't seen anything about what role crypto or Bitcoin plays into this service, but it'll be fascinating to see what it is. Is like all of the moves he makes are interesting to watch and should be paid attention to.
Agreed. I don't have much to say on it because I have not dug deep into it and what it's supposed to look like. I don't even know if that much information is even available out there yet.
Yeah.
But for someone who has a history of building so many things in so many different disciplines, like you said, plus the PayPal connection, remember, this is somebody who has been involved with a business that tried to change money and how we interact with money. So it is an interest of his.
Yep. All right. Anything else in close?
Man, any other quick hits to hit on? While we were on the call, I saw an announcement. The Supreme Court says February 20th. So actually, next Friday will be the day they release an opinion about the legality of the Trump administration's tariffs. So that'll be something to keep an eye on. This is more for fun than anything, but Ben McKenzie, you guys might remember him. There's some videos circulating of him. He's this actor who became like a public Bitcoin hater during 2022, 2023. And it's not even on Twitter. He kind of rage quit Twitter, but now that Bitcoin's crashing, he put some video out and somebody screen recorded it and put it on Twitter. I think these are bottom signals. These guys coming back out of the woodwork to say, oh, look at me. Remember I told you Bitcoin's bad. It's crashing again.
Yeah.
So there's signal in what they're doing. It's just not what they think it is.
Yeah. All right. Let's take a quick look at what we do at Swan. John is managing director of Swan Private, which is sort of our flagship service, right? Where we focus on building strong relationships with clients. John works individually with, like a couple thousand clients on a daily basis. Works really hard, and our whole Swan Private team does to really be available for answering whatever questions you have or helping you figure out what service you need. We have an IRA product here, Swan IRA. You can go to this page and check out the calculator here, put in your own assumptions and see what the projection would be to put Bitcoin in your IRA. You can do rollovers and transfers into a Swan IRA if you have a fiat IRA account sitting out there somewhere. It might be a good way to boost your Bitcoin stack. We also offer Swan Vault, which is, I think, the best way for anyone to self-custody. One of the great things about Bitcoin is that you can hold the asset yourself, control it yourself outside of the legacy financial system, KYC, etc. You can hold that. So with Swan Vault, we make that as easy as possible for you. You can have self-custody, but you don't have to go it alone, fully control your Bitcoin. You can go here and kind of see how things work. Great setup process too. It's extremely simple and straightforward. And of course, we're always there to help in case you have any questions. You can take a look at our other custody setups if you want to leave your Bitcoin at Swan, how we do that. And we have a service called Swan Guard that applies to all Swan accounts. And this is the proprietary tech that we have built up and the human layer as well that we've built up to secure Bitcoin and to protect you from identity and device theft and on-chain scam defense and fraud screening and all of that stuff. And then generations, check this out. Go to swan.com/generations and just put your name and email in to get priority access. This is a really cool thing. If you have kids or if you have some, you're an aunt or uncle or a grandparent and you want to give Bitcoin to a child, you can do that here. They're irrevocable gifts. So once the gift goes into a child's generations wallet, even the administrator of the account can't take it out. So it's there for your kid legally, and you can steward the account until they hit their ascension age, which you can set anywhere between 18 and 25 for them to take control of their Bitcoin. So this is a new service launching soon, and you can get priority access on this page here. All right. Anything else to add, John?
What was your reaction to the Coinbase ad at the Super Bowl? Did you see it live?
I didn't see it live, but I did see the video of a group of people watching it and singing along and having fun, and then seeing that it was Coinbase and then booing and flipping off the TV. So I think it's a general sentiment of crypto, and unfortunately, by association, Bitcoin a lot of times.
Totally. I think it was Marty Bent who had a good line about it. He's like, this is actually what Coinbase does. It gives you something that like you think is fun. You're kind of familiar with it, but then they rug pull you at the end and make you unhappy.
Yeah, exactly. It's great. All right, everyone, have a great